It's good to see you again. Thanks for the time today.
Good to see you.
One of the hallmarks of this morning's action is the wave of macro strategists looking for a series of 50 basis point hikes. Today it's B of A. Citi just now sees 50 at the next 4 meetings. I wonder if you think that's likely and if it's enough to sort of stem the trajectory of inflation right now.
Well, I think the Fed is really out to kill inflation. And I think they remember the old saying that only hawks go to central banker heaven. So it looks quite likely that the Fed will accelerate the pace of tightening. Right? They've been talking about being open to 50 basis points at the next meeting. And, we may well see several steps of 50 in the near future. They really want to prioritize the fight against inflation. So it's shoot at inflation first and ask questions about growth later.
One argument earlier in the week was that the bond market had it backwards and that the Fed had a great opportunity to endorse 50 out of the gate when it was really priced in to a larger degree a month ago, and they passed on it. Was that an error?
Well, I wouldn't say it was an error. There was pretty high uncertainty after the start of the war in Ukraine. I think without that war, they would have probably gone 50 in March, but I think they opted for caution. They have the ability to go faster now. They also have an additional instrument, which is running down the balance sheet at a faster pace than they did last time. And that would also lead to a greater tightening of financial conditions. So I think it was right to go slow at the beginning. And then they have the option to accelerate the pace. By the way, Alan Greenspan did a similar thing back in 1994. That was a tightening cycle that may be the analog to what we are going to see this year.
Joachim, actually, that's an interesting touch point, 1994. People have been discussing that as a soft landing, an aggressive Fed tightening cycle. But it was only the very beginning of Fed transparency in 1994. And I just wonder whether we're dealing with a different rhythm in terms of how markets are anticipating what's going on. And, you mentioned the objective ultimately to tighten financial conditions. Since the Fed raised rates, financial conditions have loosened with stocks going up, volatility coming down, credit spreads tightening a bit. Is that counterproductive to what the Fed is doing, or does that give the Fed more room to act on rates?
I actually think it gives the Fed a little bit more room in the near term, right? They don't want an abrupt tightening of financial conditions. They want conditions to tighten, obviously. I mean, that's the way how you try to fight inflation. But, given that the market reaction so far has been pretty muted, given that the markets are already priced for a pretty aggressive tightening path, they can now try to walk up that forward curve without, at least that's what they hope, without creating too much of financial turbulence and volatility.
Joachim, you at PIMCO recently had a note where you raised your risk outlook for the potential for a stagflationary environment. You say it's not your base case, but you have increased the likelihood of that happening. What's the potential that the Fed does have a misstep that pushes us into a stagflationary environment?
I think the risk has clearly increased. I think recession risks are real. They are rising. I think what we're seeing is really a stagflationary cocktail, which could push us into what we call an anti-Goldilocks environment, where the economy is both too hot in terms of inflation, but also too cold in terms of growth. So as the Fed is focused on fighting inflation, but as inflation is very high and in the near term is probably going higher given what's happened to commodity prices, I think this really leads into could lead into a stagflationary environment. So again, that risk is real, it's rising, the whole world is facing a stagflationary shock. That's a very different environment for central bankers, but also for investors than what we all got used to over the past 20, 25 years.